Okay, let's get into this. Have you ever wondered how these huge global trade deals, we're talking, $500 billion sometimes, can turn on something like a golden crown or golf clubs or even just a tweet? It's kind of wild.
It really is. And this complexity, it's not just theory, it's actively reshaping alliances, reshaping trade infrastructure, like right now.
Exactly. We're seeing these really sophisticated countries using what looks like diplomatic theater. It seems designed to handle political egos, maybe.
That's part of it, yeah. But underneath, they're running these massive, very high-stakes financial hedging plays. They're playing a long game with their money and, maybe more importantly, with their tech roadmaps.
Right. So the documents we looked at cover recent moves across Asia, the U.S., Japan, South Korea, and of course the big one, the tech fight with China.
And the main thread, really, is this tension. You've got the U.S. pushing for immediate financial wins, immediate political points.
While everyone else seems focused on long-term strategic goals, self-sufficiency seems to be the name of the game everywhere else.
It's fascinating how allies facing these huge demands seem to just roll over. But when you dig into the details, well, it's a different story. They use some clever financial footwork.
Strategic hedging, as you called it.
Sure.
Minimizing the cash out now, maximizing their leverage later.
Precisely.
So for you listening, here's what we're going to unpack. We'll look at the, let's call them judo flip moves by key U.S. allies, dig into the almost weird desperation pushing U.S. tech back towards China, and see how all this instability is causing even neighbors like Canada to rethink everything and pivot east. Okay, let's start with Japan, because the first ask there was just enormous. The U.S. wanted $550 billion directly from Japan. That's staggering.
It is a staggering figure, and Tokyo's response, honestly, was a masterclass. Part diplomacy, part financial engineering.
You mentioned diplomatic theater, lots of gestures, making the right noises.
Exactly. Satisfying the political optics.
Mm-hmm.
But the actual commitment, the financial reality behind the headline number, that's where it gets really clever.
So break it down. How much of that $550 billion is actual cash changing hands?
Almost none. I mean, maybe 1%, perhaps 2% tops will be direct investment. So think $10 billion, max.
Wait, so what's the other $500 billion then? If it's not cash.
It's structured almost entirely as loans and, crucially, loan guarantees.
Loans. Okay, so Japan lends the money instead. Doesn't that just kick the political problem down the road and not solve the immediate U.S. need for funds?
Well, that's the clever part, isn't it? Japan isn't paying protection money here. They're basically acting like an investment bank. They become a major creditor. They're earning interest on these hundreds of billions.
Okay, earning interest, but the guarantees, how do those work? Explain that bit.
Sure. So when Japan guarantees a loan, it means the actual money, the hundreds of billions, comes from private Japanese companies, banks, investors, manufacturers.
Okay.
The Japanese government itself puts up very little cash up front. They only have to pay out if those private loans default.
So they satisfied the need for that big headline number, kept their own government cash safe, and essentially turned the U.S. into a debtor.
That's it. Strategic financial hedging. Textbook.
Very sophisticated defense. No, South Korea, similar situation, huge demand, but they led with something else, more like pure ego management. What was their play?
Yeah, their approach was classic appeasement through flattery. I mean, the most visible thing was gifting the U.S. president a literal gold crown.
A gold crown. Seriously.
And the highest civilian award, the Grand Order, apparently the first time ever for a sitting U.S. president. They clearly understood that managing the relationship needed maximum effort, maximum performance.
Okay, so lots of symbolic gestures. What did that buy them in actual dollars and cents, or lack thereof?
It put them in a really strong spot for the actual negotiation. The initial demand, around $350 billion, got completely reframed. It became an investment pledge.
An investment pledge? How did that break down?
They earmarked $150 billion for U.S. shipping investments, which ups the U.S. side too eventually, and the other $200 billion. A mix similar to Japan equity, loans, and guarantees.
But again, the key thing here must be the timing, right? They didn't just write a check for $350 billion.
Not even close. This was the real strategic win. They capped the total outflow at just $20 billion per year, maximal.
$20 billion a year, so that $350 billion commitment could take, what, almost 2 decades to fulfill?
Exactly, nearly 18 years, long after the administration making the demand is gone.
Yeah.
And in return for agreeing to this, very stretched out payment plan, Korea got its tariff rate dropped from 25% down to 15%.
Wow. So they traded minimal immediate financial pain for significant immediate trade benefits. That's quite the deal.
Minimal risk, maximum long-term flexibility. Classic deal-making.
Okay, so you've seen allies kind of deflect these huge cash demands. But the place where the U.S. seems really exposed, where they arguably can't afford to lose, is AI chips. We all remember the restrictions on selling advanced chips to China.
All right.
But now the analysis suggests Washington's in something of a panic mode. What's going on there?
Yeah, this is the AI chip paradox. It comes down to economics, pure and simple. For the U.S. tech giants, especially Nvidia, well, think about that valuation.
Yeah.
It's been near $5 trillion recently.
Incredible numbers.
Those valuations aren't based on today's profits. They're based on projections of massive future growth. And a huge chunk of that expected growth has to come from the Chinese market. They need that revenue.
Need it not just for profit, but to keep the whole valuation story going, to stop the AI bubble from popping.
That seems to be the fear, yes. They need the cash flow to justify the hype. So after trying to cut China off,
Now they're quietly, or maybe not so quietly, sort of begging China to buy the latest chip, the Blackwell.
it looks that way. The desperation seems twofold. One, yes, the immediate revenue. Tens of billions to hit those quarterly targets, keep the stock price up. That's crucial for a $5 trillion company.
And the second reason?
It's more strategic. The underlying goal seems to be halt China's own domestic R&D.
How so?
The thinking seems to be, look, if we sell you our latest chip, maybe slightly tweaked, but still way better than yours, why would you bother spending years and billions trying to build your own complex lithography machines? Just buy ours.
It sounds like a trap. Offer something good enough now to stop them from developing something truly independent later.
That looks like the intention. But we have to acknowledge the gap right now. China's best chip, like Huawei's 910C Ascend, hits about 800 teraflops. It's decent.
But the new Blackwell B200 is way ahead.
About 3 times faster, yeah. China really needs to master that next-gen EUV lithography to close that kind of gap fundamentally.
Okay, but here's where it gets really interesting. China seemed to anticipate this kind of dynamic, didn't they? Back when the first restrictions hit.
Oh, absolutely. When Beijing blocked U.S. chips initially, it wasn't just about hitting back. It was a calculated gamble.
A gamble how?
To force their own companies to innovate faster. They essentially burned the boats, telling their engineers, you have to solve this problem locally now.
And are they? Are we seeing results from that push? Because they can't just sit around waiting for the U.S. to maybe sell them Blackwell chips.
We're definitely seeing clever workarounds. They're becoming masters at linking together lots of existing, less powerful chips to get more performance.
Like that Alibaba example.
Exactly. They developed this new pooling system. It reportedly boosted performance by 9 times, basically making, say, 213 older chips work like almost 1,200 working together efficiently.
What does that tell us about where Chinese AI development is focused right now?
It suggests a strong focus on efficiency, especially for inference, running already trained models quickly and cheaply. A lot of their models use things like 8-bit processing.
8-bit. So less precision, but faster and cheaper for certain tasks.
Kind of like using a basic calculator, very fast and efficient for high-volume, simpler tasks. That DeepSeek model, for instance, was reportedly 10 times cheaper to run than ChatGPT initially. It's cost-effective.
But there's a trade-off, right? That efficiency probably hits a wall with really complex AI, the big foundation models.
Precisely. For training those huge cutting-edge models, you need the raw power of better chips, higher precision. And China knows this. They seem to believe the only way to really force the domestic development of those top-tier chips is to actually stop the U.S. ones from coming in, even if it hurts in the short term.
So the thinking in Beijing is likely no deal on Blackwell. They'll sacrifice the immediate performance gain for the long-term goal of self-sufficiency.
That seems to be the prevailing view from Chinese advisors, yes. Self-sufficiency trumps short-term gains. And don't forget, China has leverage too.
Ah, right. Rare earths, magnets, the stuff the rest of the world needs.
Exactly. Beijing is expected to tie any future rare earth exports directly to the U.S. easing tech sanctions.
And what would be the #1 ask from China in that negotiation, beyond just buying chips?
It wouldn't just be about the chips themselves. The real prize, the critical demand, would likely be the reversal of restrictions on the machinery needed to make advanced chips.
You mean the lithography machines? From ASML, from Tokyo Electron?
That's the key choke point. Getting access to that cutting-edge manufacturing equipment, again, that would be the ultimate win for Beijing's long-term strategy.
Okay, let's pull back a bit. We've talked Asia, tech wars, but what about the ripple effects closer to home? Like for a major U.S. ally, What happens when U.S. trade policy, especially tariffs, feels unpredictable, kind of wax on, wax off based on politics?
Well, it forces allies to fundamentally rethink their entire economic setup, and we're
Mhm.
seeing that play out right now with Canada.
Canada. How so?
The threat of maybe another 10% tariff from the U.S., even if it doesn't happen or is temporary, is deeply destabilizing for them.
And the numbers show why, right? Something like three-quarters of all Canadian exports go south to the U.S.
76%, yeah. Their entire infrastructure, ports, pipelines, rail, it's all built to ship south. That total dependence becomes a huge vulnerability when the U.S. market feels unstable or hostile.
So that vulnerability is pushing them where?
It's forcing what they're calling a big Asia pivot. They're actively looking east now, targeting the BRICS countries, especially China and Indonesia.
Why them specifically?
Future markets. Commodities, yes, but crucially, energy. Think about the massive energy demands of AI globally. Canada sees Asia as the key future energy market.
So U.S. policy instability is literally causing Canada to start reorienting its trade infrastructure away from the U.S. towards Asia permanently.
It seems that way. And the potential policy shift they're considering now, it's a massive signal they're serious.
What shift is that?
They're looking at potentially removing the huge 100% tariffs they currently have on Chinese electric vehicles,
100%. Wow. Removing that.
and possibly also the 25% tariffs on Chinese steel and aluminum. This isn't just tweaking things, it's a fundamental change in their trade posture towards China.
Removing the EV tariffs, that sounds like it would directly undercut U.S. automakers operating in Canada, doesn't it? Ford, GM, Tesla.
Absolutely. It's a huge risk for those companies. Canada seems to be betting on long-term self-preservation and locking in access to those Asian markets.
And the ultimate consequence, if
Yeah.
those tariffs come down.
It opens the door wide for Chinese EV makers, like BYD, to potentially set up shop in Canada. Maybe even in old, idled auto plants,
So Canada goes from being a relatively safe manufacturing hub integrated with the U.S.
to potentially becoming the low-tariff gateway for Chinese EVs into the entire North American market,
which fosters tech transfer to Canada, locks them into Asian supply chains.
and builds a whole new trade ecosystem pointing east, all triggered by instability south of the border. It's a profound, potentially irreversible shift for a close neighbor.
So wrapping this up, what are the key takeaways for you, the listener? We've seen this calculated use of flattery and clever financial structures by allies like Japan and Korea. They deflected huge cash demands, positioning themselves as patient creditors, not APMs.
Right. We've also seen the almost desperate need for Chinese money to prop up these massive U.S. tech valuations, leading to this weird push-pull on AI chip policy, even while China itself is finding ingenious ways to push for its own self-sufficiency.
And crucially, we saw how that policy instability, that unpredictability, is having real-world consequences. It's pushing a neighbor like Canada to make potentially permanent changes to its trade infrastructure, pivoting hard towards Asia.
Which really forces us to ask the big question here. Will that short-term need for profit in the U.S. market, the pressure to keep that $5 trillion Nvidia valuation afloat, will that end up being more important than the long-term, maybe irreversible changes everyone else is making to global trade routes and supply chains in response?
That really is the core tension, isn't it? Can these short-term, sometimes ego-driven policy swings actually compete effectively against the very patient, very determined long-term strategies for self-sufficiency we're seeing from other major powers, from Korea's 20-year payout plan to China's laser focus on mastering its own chip manufacturing? Something to think about.